Speaking of loved ones, let me send this over to my mother because she's been calling me talking about she wants to join my session. Y'all know we got to take care of the family first. And I had a live session yesterday, so I guess it's a little exhausting because I had a live class yesterday helping my people out in East Carolina. They booked me for a session, and that went pretty well. So back to back on this thing here. And then make sure we also notify the crew on the Facebook side. I know I kind of abandoned them for a second because they're so quiet on Facebook. I don't know what's going on, man. They like to talk about garbage, but it's time to talk about the markets. I don't know if they're intimidated. Am I speaking too smart or whatever you want to call it, where they feel too intimidated to speak, to share? You know, we got to get people up out of that mindset. You have rights. You got to use your rights before they take them away. So anybody that want to see, they got everything they need. All right, still eating. So, okay. Megan says she's still eating, so she's good. Dustin said, what's up? Futures are up. Terry team. Okay, Ron with the yard work. Kareem, that's what's up. Mark, my man, the G. Not a lot of feedback posted on Facebook asking about CVX setups, no feedback. Got to stop posting on a new platform. Yeah, I mean, again, that's the whole idea is that, we're trying to transition to the new Wall Street Jack Boys platform to get all this information over on that side because it's our site, it's our real estate on the internet and we control that. Whereas, on these social media platforms, they are really clamping down on what people can say and things like that. It's just too much of a control thing. And so, it's not like we make a lot of money over here for Wall Street Jack Boys, the business itself, but I spend a lot of time in trying to get us the best platform, the best user experience that we possibly can get. And I hope you guys really appreciate it. I'm doing my best, one man trying to knock it all out. I got lots of skills, but it takes time. So I definitely want to thank you guys and for bearing with me while we actually get, keep on tweaking and keep on getting better. So definitely appreciate that. I think I got enough information out to the people that were asking. And so now we can go ahead and go live. All right. Okay, yeah, but definitely post it on the new platform. Make sure you connect with other people because it works just like Facebook. Okay, when you connect with other people and you post, when they log in on the site, they can see what you're posting and stuff like that. If you post it on the timeline or if you post it in the group or forum, you definitely should get some feedback. I want to see more of that. We do have lots of other tools that's going to help y'all to facilitate all of that. So we'll get to that here in a moment. So let's go ahead and get the Game Plan Sunday session started. All right. So welcome to Game Plan Sunday. Today is April 5th, 2020, and we're back with another session. We're going to take a look at what occurred over the markets over the past week, what we know is coming down the pipeline, and how can we leverage that information to make some money. You guys ready? Let's get it. All right. So last week was interesting. As you guys already know, just so you know, we're already in a recession. We talked about this. Markets can't come tumbling down. And we had, if you guys remember the coronavirus, we've been talking about it since like January, right? You can go back and look at my videos on social media. Last week of January, we was actually specifically talking about the coronavirus. The weeks before that, we talked about a recession to come. And the coronavirus was the pin that popped the bubbles, and then it came quicker than what we were actually expecting. Nonetheless, it came. And then when it came, the markets never sold off. You guys remember that? The markets didn't sell off. The markets didn't sell off until March, right? So in January, February, the crash was in March. So what took so long? Oil, Russia. So it was Russia that dealt the death blow, with their beef with the U.S. and Saudi Arabia. That was interesting because that's what caused the markets to crash. And people don't understand how all these things work because it's so monumental, so vast. The financial markets, it's hard for any one person to really keep up with it. That's why you have a lot of research teams that's out here that's, trying to gather, insights from this stuff. But, I keep notes and mental notes and things like that of when these things occurred. I still got it on my calendar when I actually talked about it, what I saw. And the markets looked like they was headed for a home run. We had, U.S. trade deal that was accomplished from Trump. We had the U.S. Mexico Canada trade deal that was accomplished with Trump. It looked like it was a landslide victory. Everybody was saying, okay, Trump was going to win by a landslide because he got the economy going nuts. Stock market was hitting crazy highs. It's hard for anybody to really, to try to say anything otherwise. And so we started to push our forecast back on the recession and saying that, okay, well, maybe the recession is going to come at the 2020 election, after Trump can snag that election. And so started pushing the forecast back. But then the risk that came was the coronavirus that nobody could calculate that as a particular risk. We knew that risk was, in the system and environment, whether it was trade war, whether it was Iran retaliating because we killed their top leaders, whether it was, North Korea, starting to act back up. China, we had all these different risk parameters that we're trying to weigh in. But we knew that the economy was so weak, it was very sensitive. And so it didn't take much to push it over the hill, right? We had too much debt. It was just way out of control, right? Stock market is just hitting new highs for no reason. And I was telling y'all, it's just tricky because there's no fundamentals for us to be hitting these highs. And so you may want to, be more conservative in this risky environment. And so all it took was that coronavirus to, tip it over. And that really didn't tip it over. It was when Russia came through with the oil situation, that really messed things up. So take it back this week on Thursday, the markets rallied, right? The end of the week, the markets rallied. And it was because Trump tweeted that situation with Russia and Saudi, he was, third party in it and thinking that they were going to be able to get this thing resolved. And, so the markets is rallying behind that, meanwhile, we had, record breaking unemployment numbers. We're sitting at 10 million people out of work. Okay. 10 million. This is crazy, right? The unemployment lines are just out of control. Okay. But the markets were rallying. So you guys got to be careful coming in this right now because the stock market is not going to reflect the real economy. It's too far removed from the real economy because it's a lot of manipulation that's going in there because they're trying to use that stock market to try to bring, the hope and the inspiration and the hopes of people up a little bit. If you can see the stock markets move up, it's a fake out. In Dalio's book, The Debt Crisis, he talked about it several times. Every time through the recessions, they always pay somebody to go put some money in the banks and go pay New York Times, put an article out there to say, hey, we got it under control. And then they rally before they get their heads cracked again. So that's why when Dustin, everybody's asking, hey, is this a real rally or is it a fake rally? I'm like, nope, fake rally. And I can just easily say it because the economy, this is just the beginning of the recession. Anyhow, over the past week, though, what was happening is that the market started rallying off of hopes that the oil situation was going to come through. And then Russia came out, basically, denying the claim, basically saying they haven't spoken to Saudi, right? And so that was a slap in the face for Trump, right? I know Trump don't like that. He's been really upset about it, but they don't care. And the thing that's interesting is I have a client that actually works at Shell Oil. And, it's interesting because, just when I speak to some of my clients, it's just like, hey, man, what's your insight on, this sector? Because that's what you specialize in. And the interesting thing that I learned that he was telling me is that, and it's funny because I remember reading these things and studying. We've been talking about it, but it's good to get it from people that's on the inside, too. He was saying that basically the situation because the U.S. now we're in the oil markets. We're in the oil markets and we've taken a lot of market share. Right. And we're pumping massive oil. When OPEC, they've been trying to cut back productions and try to get people to cut back on the production because that's how they get to make their money, to stop the prices from bleeding. Right. And since I'm talking about it, let me actually pull up the chart on oil real quick. because this is why the markets were moving last week. All right. Um, so they came back and said that no, they haven't even spoke to Saudi, and then Saudi they had some words. All of this is happening, right now, like over the weekend. Basically, this is what was happening. Um, and the markets just wasn't feeling that either, right? So that's when you get to sell off. Um, okay, yeah, that's when you get to sell off. Um, so anyhow, sorry, I had a question there. That's when you get the sell off and everything because it was a fake rally. It was a rally based off of a tweet, which is based off of hope. That's not off of nothing tangible. So you can't trust those kind of rallies, right? And it's going to be a nasty situation. When I was talking to my guy who's at who's over at Shell, he was saying that the issue is, and we had with our first oil company that filed bankrupt last week. I don't know if you guys saw that. And I was telling you guys a couple of weeks ago that the oil companies they're going to go out of business. They're going to be filing for bankrupt. So um, that's happening now. And what he was saying is that basically Russia, they haven't been feeling us getting into the game, taking market share basically, and that we have more pain to come to satisfy them. They want pain and they plan the game to get us out the game because they understand that these U.S. oil companies are over leveraged. They have too much debt, way too much debt. They can't service it with oil prices this low. So remember, $20, a barrel, $19 a barrel. That's good for consumers for you to spend, but ain't nobody going nowhere right now. So that's another problem, which is called demand. But the price itself, they can't make enough money, at these levels. So OPEC, Saudi, and then they've been trying to get the prices back up by cutting production. They got too much oil out there. And they need to get Russia on board. Russia's like, give them the middle finger, like, nah, because y'all hurt us, y'all hurt our business. So my man's is saying that Russia want to see some pain. They want to see us go out of business so they can actually reclaim the oil market. So you got to think the oil market is the market there. And when we stepped in the game, we took market share, right? And so with Russia coming in the game, not listening, like, no, we're not going to cut production to stop it. We're going to keep on pumping. Since America did this to us, we're going to do it back to you, and you're going to feel this pain. This is what my man telling me, right? And he's a top dog. He's not no bottom line, employee over there. But he was saying that that basically they're going to price American companies out of the market to reclaim their market share. I mean, that's pretty much what it's all about. So I just want to kind of iterate that that's what occurred over this past week. So oil is definitely going to be a high topic of this week. The theme of this week is going to be oil. Last week, I think we talked about the dollar. We talked about bonds and all that's still ongoing. But oil is going to be a lot of tension over here in oil to see what transpires from this. Because you got on one hand, Trump, he's trying to save the day. He's out here looking like a fool because he's out here yapping his mouth on Twitter because he believed that he made some progress. However, it's you being a third party. These two people got to come together and they had to do it. You know what I'm saying? So that doesn't look good on his account. And, it's just the markets is not, feeling that. So anyway, that's what occurred over the past week. We do have, excuse me here. Can we get these notifications off? Yeah, we'll let them stay here right now. But, yeah, so basically that was the thing, oil is going to be, the name of the game this week. Also, I find it interesting also is that you guys saw, you remember we talked about the president of Venezuela, Maduro, right? We talk about this guy from Venezuela, and Venezuela is also a big boy in the oil markets. Understand this. They're prominent in the oil industry. They're big dog. They make a lot of money from that. And they also have gold. But we talked about this, last year or the year before, where they had the election. And so they basically had like two presidents. So the U.S. got this one guy. They said that the people voted for this guy, but this Maduro guy, he's already been in power for quite some time. But he doesn't want to relinquish his power to the new guy who U.S. favors and want this guy to take over. So the old guy's like, I'm not giving up my power, my wealth. And he went to get his gold from the European banks because he got his gold over there and they blocked him from getting his gold. I thought that was interesting because, the U.S. sent the call over to the U.K., to Europe, and they blocked the man from getting his gold. And then last year he said that Again, we talked about this. You guys remember every Game Plan Sunday. He talked about Trump had a bounty on his head for a couple of millions from the Colombia cartel. I was like, that's interesting for a president guy to say this. And I'm not really into the conspiracies, but it's one of those things where you can't just ignore something like that. And it does sound like something that a gangster would do. And I think we can all agree that Trump is kind of gangster, whether you like him or not. That sounds like something that he would probably do. Don't know if he did it or not. But this guy is basically like he's running for his life kind of situation because, they done hired the Colombians to kill him. And for some, I mean, he obviously got some kind of intel to believe that. I just think that's funny because as we fast forward to today, last week, if you guys saw, he was in the news again because the U.S. indicted him on drug trafficking charges, which is crazy. It's like they won't let this guy live. Whoever want him dead, they want him dead, obviously, because then they indicted the guy on these drug charges, which I thought was interesting. And then we saw that this past week, they sent a fleet of Navy ships to Venezuela, right? So we got Navy ships, fleets of Navy ships, this is, like warfare off the coast of Venezuela, like ready for some kind of war. And they got a bounty on this guy head. And I want to say it's a couple millions, to get this guy, get him out. And he's not going to go down easily because he already know they got it in for him. So that just makes things, interesting to see how that happens. If you guys ever notice, a lot of these, recessions and things, these wars, it's a lot about oil. You remember, we talked about the coronavirus. Remember, since January, but what brought the markets down was oil. Remember, it was with Putin started this with Saudi and them, and then the markets came crashing down. And then this past week, we got them messing with this dude down here who has, this country. That's what they have is oil. That's what they're known for. These people are known for oil. And we're trying to take their lead out, basically. And it just sounds like another attempt to take some more oil. Meanwhile, we got beef because, we got Saudi, we got Russia, and they're not feeling us being in the oil game. We got too much oil that's out there. We don't have enough demand because everything is shut down. And they're running out of storage capacity. When you pump the oil, you got to put the stuff somewhere. And so it's going to end up forcing somebody to shut down production eventually. But these U.S. companies are going to go out of business. And sounds like we're trying to make that aggressive move to overtake this Venezuela situation even more now. They just find any reason. They wasn't even after the guy for drug charges. And now all of a sudden he's a drug trafficker. Like, what do you believe? You know what I'm saying? Like, this is crazy, man. This is not no CIA movie. But you can see where these CIA movies, these James Bond movies, these spy movies, where they get their scripts from, they get them from real life. Oh, serious. So anyway, oil is going to be something that I think we should watch for this week. It's going to be interesting with our targets that we got here. We did hit some clear floors on the Fibonacci level, which was evident right here on the charts. Nice, bounce right off of our Fibonacci's held. Coming up, it's bouncing off the 100. It's going to be interesting to see if we can get oil to come back up to right about to the 50, which is at this target. Here's the 786 retracement plus the 50 moving average. They're basically overlapping each other. So we can get oil to come back up there. That will be interesting. However, it doesn't mean it will go that way, because if this thing continues to deteriorate, in the media, then we can see this to come back down. So ideally, we would like to see it come up here before, maybe chop sideways and roll back over, what have you. But that's just something that, interestingly looking at right now. If not, then we breach these floors and we come down to the second levels here. And so, again, it depends on how much pain does Russia want America to go through. So just remember these things I'm telling you. These are things that just let them stick in your head. It's easy for you to remember things like this. All right. So, but that was basically the situation with that. Now, crazy thing is, like I was telling you, the unemployment rates were astronomical. OK. And the bad news is that this is just the beginning. And so there's a lot of people that's out of work right now. This is not good. For the economy, this is really not good for anybody. However, this is what's going on. We have employment numbers that's coming out again this week. And the projections are that they're even worse. So count your blessings, because if you're not laid off now, Eventually, you're probably high at risk of being laid off if you're somebody working. Some companies are trying to figure out a way to do it, whether they're furloughing you, put you off, like laying you off for a little bit, then they may bring you back on with hopes that they can get back. But the problem is that a lot of these jobs are never coming back. They're never coming back. And that's the thing that they're not telling you this. The way the economy works, it's a real behavior system. This is a matrix. And I tell people all the time, go back and look at every game plan Sunday. I don't know if anybody else describes it the way I describe it, but that's just the way it is. It's a matrix. It's a controlled environment. The controlled environment is not that somebody's holding a gun to your head. Not yet. But it's about influencing your behaviors, influencing you to make decisions, to make you go spend money, to make you go, take on debt and things like that. That's what it's all about. It's just to influence you. Therefore, they can put the blame back on you and say it was your fault that you went and took out that debt on that house. You just bought that brand new house back in March and you didn't know that the economy was coming crashing down. You didn't read the Wall Street Jack Boys article. You went and bought that new house, got that new debt. And now, rent, mortgage is due and you can't afford it. You just got laid off. So what do? Right? Well, it's your fault, right? Because you went and got that debt, right? We just dropped the interest rates so that you can, feel the need to go and get it now because the rates are cheap. So again, the blame goes back on you in a behavior-based game. All they do is just influence. I just show you. You got to make the move. That's just what it is, right? So that's why it's important that we stay pouring into our brains. That's what, for me, this is what I do. I'm always, pouring knowledge. I'm always learning, right? And I'm always guarding my brain. I don't soak up garbage. I really don't watch Netflix. I'll tell you right now, the last TV show that I really watched was Game of Thrones, right? And I like shows like Game of Thrones, but it's a lot that you can learn from shows like Game of Thrones, like those medieval shows like Spartacus and stuff like that. I like those kind of shows because they were, based off of like historical times and history where you had governments and, monarchs and stuff like that. You had, leaders. And from those movies, you can learn a lot. If you watch the Game of Thrones series, which is really good when they had it on, if you got to the end, when you saw the queen, what's her name, Cersei, she needed to raise some money. She didn't have money, but she wanted to wage war. She wanted war, but she didn't have the money to wage war. Anybody remember that scene? Anybody watch Game of Thrones? Let me know if you guys watch Game of Thrones. Type in GOT in the chat if you ever watch Game of Thrones. Okay. So she actually needed to get an army, but she didn't have the money. And so guess what she had to go and call? She had to call the bankers. The bank guys had to come and she had to go into debt to negotiate, to get this money so that she can wage this war. Right. And that's interesting because you're thinking like, OK, but this happens all the time throughout history. Right. And so that's why I would talk about this matrix thing, how the banks are at the top. You got to understand the money controls it all. Right. You can't fight wars. You can't go through none of that without the money. You got to have the banks at the top. So the banks are at the top. But the banks are owned. So you got to understand how this thing works, man. And the politicians are under that. They're going to set the rules and the regulation for how money is going to be placed and moved. And so they're paid for also. And then you got the people that's at the bottom, right? That's us, right? So from the top trickles down to the bottom. A lot of things is happening at the top is so far from people at the bottom, you can't see what's happening up there. So most people are just blindsided, don't even understand what's going on. But you got hawks like myself. I say a hawk, meaning that we're high up in the sky. We're paying attention to what's happening at the top. And so when we're telling you, hey, this is what's happening at the top, this is what's going to happen, this is what's going to come down to the bottom, and this is how it's going to impact you. You have to pay attention to that. You see what I'm saying? It's not just myself. It's a lot of prominent figures that's in the industry that's saying the same things. I know some people probably look down on me because I'm a young, black, intelligent brother. And I'm not on TV or famous or anything like that. But the same thing that I'm telling you, the same thing that the rich guys are telling you, the same thing that the Ray Dalios are telling you, the same thing that the Robert Kiyosaki's are telling you, the Peter Schiffs, all these guys are telling you the same thing. You cannot be a fool and not listen. You need to listen. Now, it's okay to disagree, but you need to have an open mind to understand what's going on. That's how you learn. Don't be a sheep. So when these things are happening, so when we're making our forecasts, when we're doing our predictive analysis, we're looking at history, what's happened over time with people that's in power. What do they constantly do over and over, right? And so what they constantly do over and over is always the worst thing for the people, okay? So when we're predicting these things, it's like because we've seen a behavior over and over in the past. It's not that we're like some kind of psychics or anything like that. It's just history is our teacher. And so you have some people that's not familiar with history, right? some people are not familiar with these economic cycles, and I make it my duty to learn these things so I can figure out how to navigate through this. I'm not, a bear. You got some of these guys that are just bears all the time. They always calling for these things. I'm a stock market guy. I want for the stock market to move up. That's where I make my most money, right? Although you can make money when it goes down too, but it's good when the stock market is moving up because I'm making money in my loans and my trading, right? So I want things to go up. It's not that I want them to go down, but when I'm seeing as a student of the game and I'm seeing these things, I'm identifying them. It's my duty to let my people know, because if I'm a shepherd and I have people that follow my lead, it's important that I actually give you the truth. You feel me? It's a lot of people that's selling and doing whatever they're doing for their own personal wealth or whatever. That's not where I'm coming from, right? So I actually love what I do, and I love helping people. I love teaching people. So, again, I applaud you guys. I thank you guys for, joining me on this crusade, Wall Street Jack Boys. Whether we make it or we don't, I believe that we will. But that's just what it's all about. So I just want to clear the air with that, because that's all important. I think it's all relative to the times right now. For what we have coming up this week, as I was just telling you guys about the oil situation. Well, we have, let's see, tomorrow, Saudi is having an emergency meeting with the non-OPEC allies. Let's see. So tomorrow, again, it's going to be based off of the situation with Saudi. So we have to see what that's looking like right now. And that's probably why the markets are, the futures are up right now, because they're hoping that they can get some kind of situation with this oil situation together. But again, it doesn't reflect the economy. Layoffs are happening by the millions. Okay. On Tuesday, we got the Federal Reserves. They're doing the consumer credit reports. Let me see. It said last year consumer borrowing climbed 4.5% to nearly $4.2 trillion. Okay. And so this is when the economy was great. The economy is going to poop right now. So you can just imagine what these numbers are going to be going to. And a lot of this data that they're showing right now, they're in hindsight. This is data they collected, months ago, right? So right now, all the bloodbath is happening right under our feet right now. So when we get these records, which would be, in the second quarter, it's going to be a nightmare. It's going to be a nightmare. I'm telling you. What else we got? We got the University of Michigan Consumer Sentiment Index that's coming out. I believe that's on Thursday. The BLS PPI numbers are coming out also on Thursday. And then we got the jobless claims, which we had 6.6 million last week. And I believe I heard an economist saying that they're thinking maybe 8 million this week, jobless claims, which is very interesting, so not really good. All right. Friday, we got the CPI numbers, or the CPI numbers. Yes, they lie through the data. They don't report everything. Well, people don't understand how to read the data. So, the markets always move off the first news. All this information always get revised over and over again. So we get the CPI numbers that come out. And what else do we have? I believe that's pretty much it for the most part of what's coming down the pipeline this week. So Thursday is going to be a lot of data that's coming out on Thursday. Friday. In fact, the markets is going to be closed because of the holiday. So there is going to be a short week. Friday, the markets are going to be closed. So I can remember. Yeah, the markets are going to be closed on Friday. So it's going to be a short week. And so, again, what we probably see is the beginning of the week, a short little rally, people trying to make a little money before the end of the week. So we may see that. But I tell you this because, I got to be blunt with you guys, man. I'm always looking for, when I look at the markets, I'm taking the macro view, right? I also learned a lot about the micro view when I studied the economics, and I studied the Keynesians and the Hayeks, the Austrian school, the Chicago school, all these different schools of thoughts when it comes to economics. I mean, it's really powerful stuff. That's what I've been diving into these studies over the past few weeks. And Mark, he can tell you I've been sharing a lot of insight with him. I've been sharing some insight with you guys also on my Facebook side, if you have seen it or not. And I post certain things like high unemployment rates leads to high crime rates. These are things that, these economists, they understand very well. And this is the reason why this government intervention is so important for presidents, is that they want to avoid those things. They want to avoid revolts. They don't want revolutions and things like that to happen. So the best thing they can do is keep people working. right? Because people are working. So the government, what the government does is they start doing these socialist policies like creating jobs, where they're printing money and, all this stuff to create these jobs, but it's not like, real jobs. Like you and I go and create a product and people like it and they buy it. And then we grow, Wall Street Jack boys grow. I can hire people. That's the natural market's doing what it's doing, do what it's supposed to do. When the government comes in and they're trying to create a demand, and get people to work and things like that. But none of it comes free. It all comes at a cost. At some point, you have to pay the piper in some kind of form of fashion. So that's why we keep on going through these cycles of booms and busts, because the intervention that they're doing, it doesn't help the situation. It makes things worse. The $1,200 check that they're getting ready to roll out to people, how far do you think that's going to last? Okay. I saw this video. I speak on this because I saw this video of a guy that was, I guess he admitted himself into a hospital. I don't really know the full story, but admitted himself into a hospital because he had symptoms of this coronavirus situation. And while he was in there, he was arguing with, I guess, the security staff or the medical professionals that he did not want them to inject him with the vaccine, right? And he was an African-American brother. Looks like he was African-American or Latino. And he was an ex-convict, so the guy's a street guy, so he's not, clean and stuff like that. He's like, gang kind of, but he was there and he was telling them they're not going, he said, y'all are not going to inject me with this vaccine. And the thing that's interesting is that you guys got to understand, this is America, right? This is not China, some communist country. This is America where you have rights, especially if you're an adult, they can't force things onto you without your permission. Anybody ever have surgery? You got to sign waivers and stuff like that to give these doctors permission. But anyhow, the situation unfolded with this guy getting into like a fist fight. I mean, all these guys jumped him. I don't know what the outcome was, but it turned into a physical brawl, where, that's just not good. And so I hope things don't continue to spiral out of control. As I look at all these variables that's moving, I don't see much good. I see more bad than I see good. And that concerns me, because I think that people should be concerned. I know there's lots of people that's trying to keep people hopes up and high. And I think those people are needed, because some people need to hear something positive because there's a lot of negativity spreading. But don't ignore the reality. This is not a movie. A lot of people thinking that this could never happen to us. People, and you guys saw when I posted my video, if you guys saw on was it Instagram and Facebook, I posted, my video feeds where people were attacking my posts, trying to prepare people for this moment that we're in right now. People attacking, and the reason why people are attacking is because, a lot of them are Trump supporters, right? And, again, I don't care who you support, but the problem is the reason why they're attacking my posts about the recession to come, the reason why Facebook actually rejected it, okay, because even Facebook rejected it. And then I had to go get this licensing thing from them. I had to apply for it. Actually, it took like maybe a month to get the clearance. I actually got it, right? So I actually got the little license thing. I went to go try to repost it again, and then they rejected it again. So I'll just like forget it. I'm tired of Facebook. They control too much. You know what I mean? And I'm trying to get the good word. If you guys ever read the article, it has nothing, absolutely nothing to do with politics. Anybody read The Recession to Come? Let me pull it up real quick, right? It has nothing to do with politics, but they flagged it as if it was some kind of political thing here. Let me pull it up right here. So this is the this right here is the article right here, right? The world is not ending, but a recession is on the way. And the funny thing is, this is the last article that I wrote, and I had plenty of articles that I wanted to write, but you guys know my schedule's been very busy. And then I've been also like thinking like, well, I'm not getting much interaction. Am I spending my time in the right place by delivering value through these articles? Are people reading? A lot of people are not reading. So that's why I started trying to do like videos and stuff like that, see if people get it. And so we're trying to see, if people get it. But this is an educational article, has nothing to do with politics. And so when people came on attacking the post, a lot of the things that they were saying were political reasons. And it has nothing to do with politics. You guys can read it right here. Look, by the time you hear about the recession, we'll be knee deep in it, and it'll be too late for you to prepare. Look, I mean, this was in September, okay? Right? Look at that. You see what I'm saying? These are the things that I was talking about, right? The matrix. I'm describing all these things. And then I'm describing these cycles and how these things happen. We see them over and over again. And then where we were at when I wrote this article, the things that I was seeing, consumer debt surpassing 2008 great recession levels. The IMF was giving warnings to the U.S. about the corporate debt levels are unsustainable. The economy is so sensitive because it was so weak. It just took one little pin. That's all it took, right? But that was just one thing. The job reports, the yield, all these things I described, right? Where do you see politics? You don't see anything dealing with politics, right? We even had we got a little watch list in here that was included. The stocks that I'm looking at, that I think that will probably do good during this time, right? But where do you see anything dealing with politics, right? So you already knew the people that never read the article because they led with politics, and it's because they were supporters of Trump. And the reason why they're upset is because they know that if the recession falls under the president, he has a lower probability of winning re-election. So this is where you have politics that gets in the way of objective thinking, right? And the funny thing is that, the system itself is the system, right? And whether you're Democrat or Republican, it doesn't really matter, right? The economy is the economy. The numbers are the numbers, right? And it doesn't really matter. You know what I mean? So this right here is just an educational post, but I got so much negative feedback from it. And I really wanted to share it with people because y'all know how I break things down. The Wall Street Jack Boys is the whole down to earth. That's our whole brand, down to earth, everything. And everybody else, they're a little formal and you can't understand the way they talk or whatever the case may be. But that's my gift, is to break that down so that people can really understand how it impacts you and what can you do, right? As you see, there's nothing to do with politics with this, but people was attacking. And people was, calling BS. And here we are, 6 months later, you're in a full blown recession, right? Now all those people got to eat their words, right? It didn't matter if it was the coronavirus, if it was Iran, if it was Iraq, if it was terrorists, if it was Spanish flu or anything. It didn't matter, right? Because the levels are so weak that once it come crashing down, that's why the move is so big, right? So if you guys take a look at the charts here real quick, let me just show you. Let's go to the SPX. And I'm almost finished making my point. I'll take some from you guys. What I want to do is actually go to this monthly chart. Let's go all the way back, because I want you guys to understand this. And you guys remember, everybody was saying body dip, body dip. All the people with their series and their, series 7s or whatever they're supposed to be, was telling you to buy dips, people, PhDs in finance and all this other crap. Man, that's why I never lead with my titles. People don't even know what my titles are. I have lots of credentials, bro. Like, that doesn't matter. What matters is what can you do for me? What value can you add to me? That's what matters, right? People get too fancy by, titles, man. It doesn't mean anything. Take a look at this, right? Let's go way back in time, right? Y'all didn't know we can go way back in time. We're going to go through these recessions, and I want you guys to understand what the hell is going on, right? Take a look at this, right? This right here is the 1929 recession. This is what I was writing about in my article, right? The things that we were seeing that remind us of this particular point of time in history. Now, this is a monthly chart, so 35 bars, it's 12 months in a year. So that's almost 3 years. Look at this, almost 3 years of pain. You see that? Almost 3 years of pain. All right. I just want you to see that, understand how long it takes to get through this kind of stuff. Right. So when people are, like myself, are making predictions or projections, not just because I feel like it or I want to, just looking at, history. 87 was a little different. Let's see. So 87, we had to come down. This was when it hit its peak, basically. So it was like a year. Still had it still took it a while to recover. Right. It still took it a while to come past those levels. Right. From 87, it didn't beat those levels till 91. So it still took some years, right? But just keep that in mind. That wasn't a bad one, right? But these were bad, right? Take a look at this. These are the most recent ones, right? The dot-com bubble. Look how many years that took, right? Look at that. 32 bars, right? That's almost 3 years, okay? 18 bars, almost 2 years, right? This is the Great Recession under Obama, right? And as we head into the Greater Depression, as I call it, I don't know what other people call it. I'm calling it the Greater Depression because we already had the Great Depression. We had a Great Recession. And look how the markets just rose crazy, right? And that's because the feds they put all the money in there, right? They did all the quantitative easing, blah, blah, blah. But take a look at this, right? This fall right here was only like a month, okay? Look at it. This is one candlestick. If you guys seen in the past, every time, 2 years at least. So we're in 2020. You got to drag this thing out to 2022. The pain. So, I don't know how is it going to come or how it's going to happen. But as we've seen in the past, you get those moves up, but over time, the trend is down because now we are in the bear cycle. So we're in the bear market. That cycle, it's got to go all the way down. And before it can come back up, that takes time. So anybody's asking, I don't know what other people are saying out there. People are talking about buy the dip or buy on the way down. Like, really? You want to buy on the way down? Or do you want to buy when it comes down, it stabilizes, it starts to show signs of relief, right? You see if it hits here and then it starts to stabilize, show signs of relief, meaning that it's starting to turn up. That's where you actually want to get in, right? But you can't be listening to these guys who are not actively trading in the markets because they have no idea, right? They just flashing their titles and their money or whatever the case may be to try to attract dummies. Because again, you got to have dumb money so you can make money. So that's just the way it goes, right? And we're students of the game. You can read these charts. Anybody can read these charts. You don't need a PhD to read the charts. You know patterns, right? So that's what it is. As I just showed you guys every time in history, and this is worse. We haven't seen anything like we're seeing right now. And it doesn't matter what the cause or whatever, anybody's trying to pin the cause or whatever the case may be. The fact that remains is that this is what we're in, right? We're seeing unemployment records that we haven't seen ever. Now, remember, we had all these great, job numbers and things like that was bragging about. It was all fake. It was fake numbers. I showed you guys, the people was working two, 3 jobs before at record level highs. And so one person accounting for 2, 3 jobs, that doesn't account for a healthy economy. And so it was so weak. That's why it's coming crashing down. And so we have to make right. Will we make right with it? No, they're not going to make right with it because that's what, men with power do. If you ever watch like Lord of the Rings, right? Frodo, he kept on trying to stick his damn finger in that damn ring. And then you hate that in the movie, like Frodo, stop trying to put your hand in the damn ring. It's going to corrupt you, B. His man Sam was trying to tell him. He kept on trying to stick his damn finger in the ring because he got that power. It's that power to do whatever. So men with power, they always, going to do, the thing that they're not supposed to do, right? So there's a lot of people that's hopeful we'll go to a gold standard. I think that would be great if we did, but I just can't see that happening because we don't see men doing that anytime in history. So I can't make any kind of, predictions off of some hopes. I can look at history and I see their behaviors, and their behaviors is always the same. And it doesn't matter if it's Trump. It don't matter if it's Obama, if it's Biden, if it's Bernie, whoever's in that seat of power, man, they're going to do what they, have to do, whether it's good or bad. Now, what they normally do is they try to actually stop the pain short term, right? Short term. And this is why you have this whole economic beef with, the Austrians and the Keynesians, right? Because it's behavior. It's all about behaviors. And so the Keynesians, they figured out a way to remedy a situation short term. However, it brings more pain every time in later time. So that means right now, say if they fix this right now, let's say positive, right? Best case scenario, they fix it, they get the economy back roaring. The damage that's done, your kids is going to have to pay for it. And the next crash that's going to come is going to be even worse. It happens this way all the time. And it happens until they completely destroy the currency. So then it goes back to, the currency market where they destroy the dollar. And then we go to some kind of digital. Right now, they're trying to go into this digital dollar situation, cryptocurrency, if you will. But they will go to digital dollars before they will go to a gold standard because they can manipulate, right? They can control that. If it's digitized, you can track things, right? The government, they always like tracking and controlling. Gold, you can't control and track, right? That's why they was out there trying to get people. They had to get people to turn their gold in back in the 30s when Franklin Roosevelt had outlawed gold, right? Because they messed up. Smart money went and bought all the gold because they knew what was happening. So that's what's happening right now. All the gold and silver is gone. Shout out to everybody that's actually taking my warnings and actually went out and got yourself some gold or some silver. I know Meg just read up, you know what I'm saying? My man, Mark read up, Ron, everybody's been, getting in on it. And, that's a good move, right? Because there's a time for everything, right? There's a time that stocks is going to do their things. A time real estate is going to do its things. A time that gold and silver do their things. A time they don't do their thing. When the feds are printing money, gold and silver are going to do their thing. And the paper, silver and gold is not reflecting the real value. The real value, you already know because of supply and demand. You can't get your hands on it. it's sold out everywhere, right? And they got all these businesses closed down. And so we had this one shop I was telling you guys about a couple of weeks ago before the shutdown. I was telling people, hey, go down to this shop and go get you some silver, right? Because they got some. And it's a gun ammo store, but they got silver, right? And then I called them up again, was it last week or so? And because now we're in the shutdown, we're in the lockdown, and the guns and ammo section is actually still open. But guess what's not open? The silver, right? And they got it, but they can't open that side of the store. That's interesting, right? Because if you would have took my warning, then you would have been able to get your hands on some of it. So it's going to be even more difficult for you to get your hands on it right now. So there's a shortage of it, and there's an over demand. The demand is really, really high for it. It's going to do what it's going to do over time. Just believe that. So anyhow, but yeah, that's what I had to say right now. Just remember, it's going to be a short week. Friday, the markets are going to be closed in observance of Good Friday. Oil markets is going to be something that we're going to have to pay attention to this week. On the positive side, I looked at Walmart has a pretty interesting squeeze set up here. You see right here, this setup on Walmart is looking pretty good. So if the markets does bounce tomorrow, we may see that play out in Walmart, which is actually looking better than a lot of other stocks right now, right? Even in the retail sector, you look at Target's looking like trash right now, right? But Walmart is looking good. A lot of people are still going to Walmart. This is looking almost like a triple bottom setup here. And so, you know, we hit those, right? Or inverse head and shoulder. It's kind of weird. But yeah, we got this squeeze that's forming down here. We got the trend that's moving up right here. We have a buy trigger that's right here. So it's interesting to see how this is going to work out. Keep in mind there's a key resistance level up here. So we want to see it bounce up here, see how it behaves. If it goes through it, then, you know, we have target up ahead here. If not, then it's going to chop up, and squeezes can fire duds. So just keep that in mind. But I do like that to the long side. So that's pretty much on the long side what I'm looking at. You guys got anything you guys want to take a look at? I know Ron has some setups. KL, if that double top, okay. You might like KL if that double top at 34 on the hourly doesn't make the squeeze fall apart. Got a clear hourly moving average, bullish on late. Okay, so gold is interesting. Let me just pull up the big sector first. Again, so you know, gold and paper gold and silver is not reflecting the real gold and silver. These things, they should be way out of here, right? Gold should probably be at, you know, at least 1,800 right now. That's what it should be, but it's not, because of the, you know, the manipulation that we got going on. Interesting thing about gold is that it's chopping sideways right now. Excuse me. So you gotta be a little careful at this 786. This is the 786 right here. And we're seeing that it's, you know, it's chopping up in this range. But it could be forming a flag here, right? Which that would be ideal. That's where it should be moving. I don't have a catalyst that's actually going to, you know, make it push that way. So I don't have a squeeze on it. But that doesn't mean that because the squeeze is not parent, that it can't push that higher. But I would expect gold to move from sideways to up. So that's the direction that I pretty much have on that. And so when you take a look at the big picture, then we'll dial into some individual names. Like, let's take a look at KL. And you have a pretty, you know, interesting situation. Again, these are, you know, counter trends. You know, they're trading under their moving averages. So we got the 50 that's still up ahead. We still got the 100 up ahead. We got the 200 up ahead. So it's the resistance levels that we got to plow through on this. It did just go into a squeeze, which is interesting. And KL wasn't rallying when gold was rallying. That was an interesting situation. So a little tricky with these names here. But for the short term, the trend is reversing. So being that it's reversing, it's a counter trend trade though. So the bigger trend is this move, right? So what we want to see is if it comes up to the 100 moving average, right? And that's right there where my other line is at. And then the 200 moving average, which is a major level of resistance. So it's got to get through these humps in the road here. So if you are actually making a move in KL, if it hits this target here, okay, that's where you want to cash out at, right? Because the markets are so volatile, anything can kind of go. So you don't want to be holding on these, you know, for weeks at a time right now because the volatility is freaking crazy right now. But if you hit this target, cash out. All right. And then, if it resets, catch it on a bounce to the next leg up, which would be up here. What else we got? Lake. Let's see. Okay, definitely like this setup right here. See, Ron be coming through with the setups. Y'all got to get that man his credit now. This is definitely a bullish setup. We got the 8, right? We got the 8 and 20 up here. We got the 50 to 100 to 200. We got price that's above its moving averages. Okay. We have the squeeze that's in place. We have the trend that's moving along the way. We got the momentum also. We do have earnings coming up. So this is going to be a play into earnings to ride it north into his earnings. And so what we could be seeing here, now I don't know, but with that squeeze in there, we could be seeing the formation of a double bottom, right? So that's a double bottom pattern on top of it. So I do like that to the long side. That's a nice play right there. What's up? What else we got? Short on Starbucks. Who trying to make some money on the downside? Let's see. All right. So Starbucks, interesting. This is one of those bear flag situations. All right. So you get the whole situation here. We do have a buy trigger to get in right here, but that doesn't mean that it's always the same. We caught a buy trigger back here on this particular chart and it fizzled out. So certain charts behave different for certain different indicators. And so although I see that there, it doesn't mean that it's going to be a bounce rally. The bigger pattern here is that bear flag, and it normally moves like that. It is at a high point, could be topping over. I don't have a buy trigger on my stochastics, but I think I share Ron's sentiment. If I was to play Starbucks, it would definitely be on the short side. What else? AMRN, it's a pharmaceutical. What's this one? This is a Amarin. What are you trying to do with this one, Umar? This is a penny stock. So you got to remember, with our work, it works better on, like the blue chip stocks. Okay. Even though this was a bigger company, now it's down to penny stock level. The thing is that you guys got to understand, once you learn trading and investing, the key thing that you always have to learn, okay, is the risk. What is the risk? Anybody know what the risk is? We all know what the reward is, right? Whether it's the Lamborghinis, the chicks, the Cuban cigars, you on a boat, money making is the reward, right? The risk is that every company that's on the market can go to zero. Okay. So just because you see a cheap price doesn't mean that you're getting a good deal. Remember these words that I'm telling you. That's why you can't be listening to all these people out here that don't actually actively trade, whether they got PhDs or not, and they're telling people, oh, these are going to be stocks to buy. This is an event that none of us have seen before, ever. This is worse than anything you've ever seen in your life. Some of these companies are never coming back. A lot of these companies haven't started filing for bankruptcy yet, but they will. That's going to be coming. So I don't know what your intent is with this particular stock. I don't really know much about it. But just taking a look at it, I imagine you probably see a cheap price on it, probably figuring that it's a good deal to get in at this low. Just remember, even though it's at $4.78, it can go to zero and you can lose your whole entire investment. So if you're looking to play the long game, with long-term investments, fundamental analysis is going to be your friend, right? Fundamentals. And you guys can actually go to, let me just show you real quick. You can actually go on right here on your analysis tab, and you can type it. We have fundamentals on Thinkorswim now. We used to didn't have it, but now we do have it. It's been here for quite a little while. But just type in the name of the stock that you want, and you can see, these analysts that actually, they did all the hard work. Myself as an analyst, with a financial modeling analyst, designation. I know how to do these things myself, and I do it myself. It takes a lot of work. That's why you have a lot of research teams that do this stuff. It takes a lot of work to put together these financial statements to, derive its conclusions. So looking at this is, it can hurt your head. That's why I tell people looking at the charts is sexy, it's easy. Most people can do that. But trying to convert these numbers into derived conclusions, it is a difficult task. That's why these analysts, they get paid big bucks. But you can just take a look at their analysts, and they, give you, insight on what they're seeing with their financial models. Yeah, that's see you. That you can see their financial models on these things. And if you're looking at, before you buy any stock, before you listen to any of these YouTube stars or these Instagram, people who are out here trying to sell you something, the information you can get, free on this site here. Okay. Well, this is an I think it's one platform, but you can see their research teams updated as of April 5th, April 1st, March 27th. What did they tell you? I mean, this is what they're doing. Reduce, sell, avoid. So, but hopefully this helps you out, if you're somebody, because, honestly, it's a lot of noises out there. And then maybe you do have some savings that you actually looking to put to work in the markets. Definitely, this is an easy tool that you can go in and put it. Now, there are some more robust models that's out there that you can take a look at. You can go through like Zacks.com. You can go through like IBD 50 and take a look at their research analysts, but you got to pay them. And their services costs, maybe, I don't know, maybe $500-$600 a year. And, if that's an investment that you want to do, just, just understand it's not free. You're gonna have to pay for it. So, but this is an easy way to look at. You just go simple here. If the whiz kids are saying avoid, forget what people on YouTube or Instagram are talking about. Okay, just avoid it, because it's just not good. These companies, their financials are not good. Are they able to deliver value over time? You as a person, as an investor, you're looking to, make money. That means that the company has to make money, right? The profitability, they got to make money, right? If they're down, 77, down negative 37%, that means they're not making no money. So you as an investor, you don't even know if they're paying dividends, but if they're not making no money, you can't get no dividends. It's just not going to happen. They're going to mess around and go out of business. There's going to be another company that does the same thing that they do, probably do it better than them, that's going to take over the market share. That's the way the free market is supposed to work. But it takes a lot of time to go through the research, do the analysis if you're looking to buy these stocks. And if you're going to buy them, you do need to be buying them by the thousands for it to be a viable investment. That's why most people just go with trading, because you can make that kind of money in a couple of days to months, and then use that money, put it, and then take the money that you make from trading to use for investing, right? Whether you're buying your silver, your gold, your real estate, or you're buying stocks, you can take the money from trading and you can actually invest. It's just a faster way for you to get that capital, right? You're looking years down the road. Can this company deliver value? Can they deliver alpha for me, 5 to 10 years down the road, right? That's what you're basically looking for, right? So, and then some of those companies, those companies that are doing it, they're expensive, and you want to get those at a better deal, which is the Warren Buffett strategy, right? You're buying dollars for 50 cents. All right. So with that being said, let me see what we got over here on the YouTube side. Okay. You can buy the books that you're talking about. You can buy them online, man. You can go to, well, I will say, I normally go to Barnes and Nobles. I'm a regular over there. I have, extensive library. I got books all around me. I got books all over the place, to be honest with you guys. This is crazy. Let's see if I can actually, I think the person's asking about, Granddaddy Dalio, his book right here. I call him Granddaddy Dalio because he's been around for a while. This is a 3-book series. It is very advanced. He has a really great way of explaining things, and his team, they're brilliant. Okay. This may be a bit much for you if you don't have a basic understanding of money, currency, stock market. You do need to get some understanding of all those things and a little bit of economics before you can really understand it. So this may be a little intimidating for you because it's 3-book series, but he does have some videos and things out on YouTube that anybody can watch, and he explains it perfectly well. But this is the hardcore studies right here. And I get all these things from Barnes and Nobles and stuff like that. But I have all kind of books at my desk. I got financial modeling. I tell you guys, building financial models. Stuff like that. This is the type of stuff that I'll be doing in my free time. I'm always studying. I'm doing some nerd stuff, building models or what have you. I got books like all around me. So But that's what, on the YouTube side I was asking about that. But you can get those books online because I think a lot of the stores are closed right now. So go to Amazon. If you have an account there, it's probably the easiest way. Got all day. Yeah, Game of Thrones. Okay, he's talking about that. Okay, it's Market Crisis book. Yeah, the Debt Crisis book. That's what I was talking about, Shad. So hopefully that answers your question. All right. So with that being said, man, we got a couple of things to look at. Remember, it's going to be a short week in the market, so don't put too much at risk all at once, and make sure that you get in and out your position before Friday because it's going to be a long weekend. And you know how those long weekends go. So just keep that in mind. With that being said, we'll holler at you guys throughout the week. If you guys on the website, make sure you hit me up. Let me know how things are going. Hit me in a DM in the website, and we'll keep it going. All right. So y'all have a good night. Enjoy time with your friends and family. Peace.